Hello everyone. Good morning, I think, first of all, to our friends that have joined us from Europe, and good afternoon to all of our guests that are based in Dubai and the neighbouring countries. On behalf of Vistra, the Dubai International Financial Centre and Outer Temple Chambers, we'd like to welcome you all and thank you for joining. My name is Hibel Imara. I'm the Managing Director of Vistra Middle East, and I'm delighted to welcome and be joined by my fellow panelists. We're joined today with Salman Jeffrey, who is the Chief Business Development Officer with the DIFC. Also Ali Hassan, the Senior Representative for Europe and North America. From Outer Temple Chambers, we have David Russell, QC, and my colleague, Chris Marcus, our Global Head of Private Wealth Services. Over the next hour, we will be exploring and discussing private wealth opportunities. It's a topic that is relevant regardless of where we are in history, but probably even more so in the context of what we are all experiencing at the moment. So our discussion really is going to be about what role Dubai plays, and particularly how the DIFC is supporting with the legal structures available that support families to protect and grow their wealth. Salman will begin our journey by setting the scene for us. Ali will then share some insights. We will also look at the advantages and opportunities of the various DIFC structures and entities. And Chris and I will share our experience at Vistra and the support that we provide for clients and the exposure that we've had both here regionally and also internationally. Before we kick off, just a quick reminder of some housekeeping notes. So we are recording the session. We'd like you all to please continue muting your mics and ensure that your cameras are off. Salman, over to you.
Thank you, Hiba. First of all, it's an absolute pleasure to join everyone on today's webinar. Good afternoon and formally welcome. Ramadan Kareem to everybody as well. I would like to first begin by thanking Vistra for the partnership opportunity and for hosting today's event. The DIFC is a pretty big place, and we have something like 300 to 400 service providers, and as the largest market between London and Singapore. But there's only really a handful of firms that have shown the ability to, drive, shape, and enhance the market, and we definitely view Vistra as one of them, and a trusted and valued partner with all of your offices globally and your DIFC presence. So thank you again. One of the benefits of doing talks like today is that we have a great panel, and so the audience will not have to suffer the slings and arrows of data coming from me. But rather, what I wanted to do is spend a few minutes on making a couple of personal and business observations, rather, before I hand over the conversation into the hands of a very distinguished panel with lots of great insights for our audience. Let's address the elephant in the room. The world as we knew it several weeks and months ago has definitely changed. The fact that we're having this conversation online and digitally is a manifestation of that. A lot of thought about what's happening, a lot of thought about people who are impacted by this at all ends of the economic spectrum. And therefore, it's a time of personal reflection for all of us about what this means, what's going to happen. And uncertainty is frightening for financial services. I want to tell you a quick story about some uncertainty that many of us faced over 20 years ago. I was in New York working for Merrill Lynch, crisp September morning. I think it was the 11th, actually. And like thousands of other people in New York, we experienced September 11th vividly. That day, I was right there when the buildings fell, was with the thousands of people who were mourning all of the kind of losses. And I remember people saying that they would never fly again. I remember people saying that the insurance business would never rebound. I remember the stock market completely tanking. Does that sound familiar to anybody? In fact, by a show of hands, does anyone remember what the Dow Jones was at September 17th or so, the week after the markets opened? It was 88.47. In March of next year, it was 72.23. But the point is that markets, people in markets do rebound, and I think it's worth reflecting on that observation. From a business perspective, much like 9/11, post 9/11, we saw significant change, significant restructuring of at least many global businesses. Not the same as today, but things did rebound. In the subsequent 7 or 8 years, we saw a couple of things. Credit Suisse calls the era between 2000 and 2007 the golden age of wealth creation, where something like $111 trillion of global wealth was created, particularly after a notable global economic event. We had the biggest, one of the biggest bull market runs, at least up until the most recent one, which ended with the Great Recession. Similarly, in 2008, 2009, when markets were really impacted, stock market in 2009 was 7,200. And then there was an 11 or 12-year run with great prosperity and wealth creation. And so when I reflect personally on where I've been and where the markets have been, I'm hopeful about the fact that people and economies and ecosystems that are resilient do well. And that brings me to a few observations about where we are, which is in the UAE, in Dubai, and DIFC. This is a small country. But for a small country, it has shown a lot of resilience. We've shown a lot of can-do attitude based on our history of commerce and culture. And with all of the economic stress that we're seeing globally and regionally, I'm happy to say that conversations like today are really a testimony to the type of spirit that we're seeing in the marketplaces, which is about looking at what is possible. Here at the DIFC, we're young by global standards, but together with partners like Vistra and of course a veritable list of global financial services firms, we've been around for, this is our 16th year. And what we've tried to do is give our regional markets the stability, depth, and scale that are necessary for economic growth. It's not to say that we don't have concerns. It's not to say that we don't have real economic problems coming in front of us in the face of low oil or depressed markets. But I think what we've tried to do is to be resilient. We have tried to support our businesses. You are probably familiar with a number of stimulus programs ranging from liquidity from the central bank at the UA level to federal stimuluses to economic stimulus package that we have, fintech stimulus package, retail stimulus package. And I think I'd like to close with a view that ecosystems do well when we work together, when we collaborate, when we share ideas. And I really look forward to today's discussion because I think we have industry practitioners from a number of perspectives who are able to share their views on what they're seeing in the market and talk about the structural advantages that we have in place that I think puts us long-term in a pretty good position to talk about opportunities in the private banking and wealth management markets. So without further ado, thank you for your time. I look forward to a great conversation. Let me pass the mic, the proverbial mic, over to my colleague, Ali Hassan.
Thank you, Salman, and good morning, good afternoon to everyone. I will now share my screen. Excellent. All right. So just picking up from where Salman has left off, and just to share with you some insights into the private wealth landscape in MEASA and in particular the GCC. If we kick off with just the recap of where wealth in the region has been driven by, yes, oil, but also you have had over several decades now a above trend economic growth with a corresponding rise in regional financial services. And that economic growth has been driven by a need to diversify. So certainly in the GCC, you've seen that significantly, and also the rise of India as an economic power. Now, post-COVID, and picking up on some of Salman's points, you can only see the acceleration of diversification, the adoption of the digital economy, excuse me, and the rebound in India in 2021 and forwards. And indeed, you know, if you're picking up the changes that may be coming in supply chains, maybe a diversification away from China, you tend to think that Myanmar and you know the countries within it are probably in a good place to benefit. You have a very supportive demographic with 40% of the population under 25, very tech savvy. So it's open to those digital channels, and you're going to see, you know, the digital economy becoming more increasingly important. And in terms of the diversification, the GCC and Dubai, in particular, has over the decades invested both publicly and privately into the soft and hard infrastructure that we're going to touch upon to support businesses and, you know, the financial sector development. So oil and the subsequent economic development that we just touched upon has, of course, led to a large concentration of sovereign wealth funds in the GCC. But less appreciated, I guess, is actually the quantum of private wealth that sits in the region, which is actually in quantum terms comparable with the size of the sovereign wealth funds. Now, the nature of this private wealth is undergoing a transformation as it moves from the first generation wealth creators to the second generation wealth preservers and allocators. So firstly, and there's sort of two aspects to that. Firstly, there's a shift away from physical businesses, real estate and cash to more sophisticated financial solutions. And secondly, there is more of a demand to properly structure those assets to enable protection of a family's interests, because predominantly, you know, these businesses and these assets are family owned, and also to provide clearer succession planning. And of course, this transformation is underpinning the demands that we see for financial products and, you know, more sophisticated wealth structuring. The UAE, in its own right, provides a high concentration of wealthy individuals, but also increasingly, the UAE and Dubai in particular has been identified as a favoured domicile by out-of-country wealth, if you like, with a recent ranking having Dubai as the 7th globally in terms of a destination for ultra high net worth and high net worth individuals. And that interest is, coming predominantly from the region, but also more widely. And that growth in wealth and wealthy individuals is being played out in the private banking sector. So this is just giving you an insight into that. So GCC private banking, growing at around 7-8%. In the DIFC itself, we have a number of international private banking platforms that are set up in the centre and provide their expertise in the region. But you can also interestingly see that the AUM is increasing at a faster rate in terms of its local booking rather than going offshore. So yes, of course, the majority is still being booked elsewhere, but the rate of growth of local booking is faster. And I guess this sort of indicates a couple of things for me. I mean, I think it firstly suggests the development of regional capability and expertise. And secondly, that investors are gaining more comfort in terms of the regional legal and regulatory infrastructure that's been put in place. And we'll touch upon that in a moment. And just another insight in terms of the amount of money that's now locally managed in the DIFC. So out of the $500 billion that's been raised through the centre, 100 billion is now managed in the centre, and that includes family offices, proprietary investment companies, as well as asset managers. So I think that it is the observation that we have is that you're getting wealth structuring options increase for families in the Middle East, and that's pretty much driven by the factors that I've put up on this slide. So yeah, that development of proper legal frameworks, combined with the type of structures that people are looking for. Secondly, that's the confidentiality premium of those traditional offshore centres. That's now been pretty much clamped down upon, right? So we've had global anti-money laundering standards, we've had tax transparency initiatives, and that's really eroded that a premium that some of those traditional offshore centres offered. In terms of geopolitical risk, I think that they have certainly risen, according to the BlackRock Investment Institute. That geopolitical risk has increased steadily over the last 20 years, and I just think that there's less clear differentiation around stability. When you're looking at somewhere like the UAE versus other jurisdictions. So that's probably less of an issue now. And then, as I said, the rise of local expertise with the presence of legal firms, corporate service providers, and financial services institutions supports those options. Now, turning to Dubai specifically, as Salman mentioned, rich heritage as a global commercial hub, and it's worked extremely hard to build on that through various initiatives that support business and attracting and retaining talent. And the rankings that you see there illustrate those efforts. And I think it's an amazing statistic that 70% of Fortune 500 companies have their regional hub in Dubai. And from a lifestyle perspective, for wealthy families, perhaps not from the UAE, but from a wider region, you have excellent, travel capacity throughout EMEA. You've got a conducive visa regime that caters for families and employees. You've got a high standard of living, and last but not least, a safe and secure environment in Dubai and the UAE. Now, turning to the DIFC ecosystem, I mean, it was established in 2004. It is the largest financial and professional services hub in Miaza. It's been ranked number 1 in Miaza, number 12th globally in the current ZEN Global Financial Centers Index. And the aim has always been to create a center in line with international standards with business-friendly aspects. The corporate governance in the DIFC is very, very strong. Each of the bodies has its own independent board, which is not the same in all centres that have been established. We have a common law framework. We have our own set of laws, which is another important differentiator as far as I'm concerned, because it means although our laws are in line with international standards and look to England and Wales, we have the capability of flexing those laws to take into account our local environment. And of course, we have our own independent regulator, the DFSA. So Dubai, DIFC is a jurisdiction within a jurisdiction with our own laws and our own courts that administer and give effect to those laws. And in terms of the private wealth structures, we have continually enhanced the regime. I'm not going to go into the details of these because we have some great experts that follow me, but we feel that now we have the full range of vehicles that people look for. We have our wills and probate registry, so that the protections and the planning capabilities that families and entrepreneurs look for are there. And suffice to say that the DIFC is always looking to promote international standards. For example, we will implement an economic substance test in June in line with the OECD initiative on base erosion and profit shifting. We will also not, for example, allow re-domiciling of structures if there's any question on the authenticity of the proposal. But of course, we provide a business-friendly environment, so a very attractive tax environment with a DIFC presence. You have a 3-year residency visa renewable. A company or an individual qualifies for a tax residency certificate, and you have full control over whatever structure you decide to set up. And then finally, just to emphasize the point, if people are looking at using the jurisdiction, you're in great company with some of the largest financial institutions hubbed in the center. That's it from me. I will now unshare and pass on to David for his expert analysis of our framework.
So Ramadan Kareem, everyone. What I'm seeking to do in this segment of the presentation is to follow on particularly what Ali was saying, that the DIFC has made a great deal of effort to build a legal infrastructure platform for private wealth management, which is second to none in the world. And what I'm hoping to do is to introduce you to that now. Next slide, please. And curiously enough, one of the best answers to that that's ever been written comes from someone who came from this part of the world, Ibn Khaldun. His family actually came from Yemen, although he lived most of his time in North Africa and some of it in Spain. And the point is that in order to have private wealth structures that survive, you have to have a stable and secure framework of property rights. Now, that's a proposition that's certainly been extended and developed by people elsewhere in the world. But Ibn Khaldun was one of the first people ever to actually articulate that. And in this particular extract from the prologues, he expresses it, I think, very well. Now, the wealth management vehicles that are available in the DIFC are essentially three. There's the question of the corporate structures, the trust structures, and the foundation structures. Rather than talk about it myself in terms of the assessment, here are some assessments from independent people. We were very lucky in one sense in the DIFC that trusts had to be implanted into a civil law environment. And in order to do that, it was necessary to start off with a framework that explained precisely what a trust was. And in this case, we moved to the Uniform Trust Code in the United States as the basis, so that instead of having to look at one standard works on trusts and then apply a trust legislation which dealt with some of the issues that arise from the administration and management of trusts, but not all of them, we have it all in one law, so that by reading the law, you get a pretty fair idea of just exactly what a trust's all about. And it's a big claim to say it's possibly the best trust law regime in the world, but if you go to the next slide, you will see why people say that. We started off with an existing trust law, which was admittedly also based on the Uniform Trust Code. And we then took advantage of a patent of the Caribbean Court of Justice, but who's also the editor of one of the leading trust textbooks, who every year does a summary of what is available in terms of trust jurisdictions throughout the world. The standard beneficiaries trust, there's nothing new about that. Charitable trusts, again, there's nothing new about that. But purpose trusts are new in a lot of the world, although not so much in the offshore centres. But certainly we have them in the DIFC. The more important thing, and we obviously have the special purpose trust alternative regime, which came originally from the Cayman Islands, and the Vistra trust, which relate to management of businesses, which came from the British Virgin Islands originally. But next slide. In some jurisdictions, provisions for rectification of mistakes, because if you make a mistake in the context of management of a trust, that can be a very expensive thing for the revenue. That was based on jurisprudence in England called the rule in Hastings-Bass, which has now been overturned in the Supreme Court. We have restored the Hastings-Bass rule in the DIFC. We have extensive powers of variation and revocation, particularly important in relation to trusts where a set law desires to be Sharia compliant. The powers of the court to deal with those matters are extensive. They probably exceed anything that's available elsewhere in the world. Another valuable aspect of the trust law is there's a capacity for private arbitration of trusts. So that families, and I've already mentioned Sharia, there's provision for advisory trustees to ensure that a trustee will comply with Sharia requirements if that's desired by the set law. The particular importance, and there's also been, we've already mentioned the question of confidentiality. As has been mentioned by Ali, there's no desire whatever for the DIFC to become a centre for shady money or shady people. But equally, in this part of the world, there is a recognition of the value of privacy, so that whilst, particularly in Europe, you're now seeing a great deal of pressure, not just for information to be available for law enforcement authorities as required, and revenue authorities, but also for it to be publicly available to people who are said to have a relevant interest. And that's been defined in some European countries as including investigative journalists. So at that point, it's fairly clear that your confidentiality is gone. Here, there's been a great effort to ensure that people who want their private affairs to remain confidential will be able to as I say, by breaking laws applicable in other countries. But subject to that, your affairs will be kept totally confidential in the DIFC. The other point is that within both at national level and at Dubai level, a great deal of effort is being made to enhance the recognition of DIFC trusts. Next slide, please. We then move to foundations. Foundations are, to a common lawyer, a very new thing. Foundations originally came into existence in Europe, and until the mid-1920s were really for charitable purposes. They had much the effect of a charitable trust, a body, something set up for public purposes, differs from a trust because it has legal personality. In the mid-1920s, Liechtenstein pioneered the use of foundations as a structure that could be used for private purposes, and that concept came into the common law world initially through the St Kitts and Nevis legislation, and has now spread to the Crown dependencies and the British Caribbean islands. But basically very much a reflection of the Liechtenstein legislation. As the foundations law is a next generation foundations law. It has a number of features that are not available elsewhere. As you can see, the essential characteristic of a foundation is that it is a body corporate separate from its founder or other persons. The easiest way to think of the foundation is it's a company that doesn't have shareholders. We've aimed in the foundations law to have maximum flexibility. There is no requirement to have extensive office facilities in the DIFC. There is no standard charter or bylaws, which are the governance documents roughly equivalent to a memorandum and articles of association of a company. Models have been published, however, which people are free to adopt. There are three types of foundations permitted: charitable foundations, non-charitable purpose foundations, and foundations which benefit people by name, category or class, much like your traditional trust. But they're not limited to estate planning. In particular, a concept which was developed initially in the Netherlands of a depository certificate has been adopted in the UAE. We were lucky to have the benefit of access to draft legislation in Luxembourg, which provided for these arrangements in a much more detailed way. Control comes through councils and guardians rather than through shareholders, and they're appointed largely by the founder of the foundation. And interestingly, you can convert a foundation, convert a company into a foundation. So if you have assets presently in a company which has moved into the DIFC, if you decide that a foundation structure is more appropriate, it's easy to convert it. The rules that I mentioned about mistake and private arbitration in relation to trusts apply also to foundations, as do the firewall provisions. So in other words, the DIFC will not enforce foreign judgments in relation to trusts or foundations that aren't consistent with the laws of the DIFC itself. Next slide. We've now moved in relation to companies to a new companies law, which again is modelled on international best practice. It avoids a lot of the issues that existed in relation particularly to the onshore companies law. And most of the features that you might expect to find in modern companies legislation is there. Separately, the administration of the law has been clarified through a DIFC operating law. One of the interesting things that is available under the operating law is a process of certification, and this applies to all DIFC registered entities, which enables the registrar to certify to government officials elsewhere in the world, including, of course, in the UAE, precisely what these structures are, because sometimes that is not well understood onshore. That provides a very useful means of, for example, guaranteeing to the onshore regulators that there is going to be full compliance with national ownership laws. We also have strong laws relating to the disclosure of ultimate beneficial ownership, again, so that the DIFC can assist other jurisdictions in relation to their tax compliance. But as stated, there's no capacity for that to become public information. Next, please. And that, as you can see, gives you some idea of the changes that were made with the company's law. There's no need for me to go into detail in relation to those. The operating law I've already discussed, so I don't think it's necessary for me to say anything further about that either. And I've already discussed the ultimate beneficial ownership regulations. But as I say, the key point is that the registry is held by the entities concerned, and but it's accessible by the regulatory authorities. So there's complete guarantee of confidentiality. Next. And there are various things coming along, particularly in the area of prescribed companies. There are further amendments on the way in relation to that, but they basically extend the... Next. Thank you very much. That covers me.
Thanks very much, David. So just by way of introduction, I'm based in London, just outside the UK. So as the global head of private wealth for Vistra, gives me the privileged opportunity, I guess, to speak with international clients and colleagues regularly around the world, being based in this part of the world. And the Middle East, I think, is, and the DIFC in particular, is a extremely interesting jurisdiction in terms of where we see a number of the global trends at the moment. The purpose of this session, I think Heather and I are going to be giving some of our insights into what we're seeing in terms of the families that we spend times with, that we're working with, around a number of these trends that we're seeing. I think just to begin, globally, I think there are four critical major trends that we're seeing around private wealth. Firstly, as Ali mentioned, significant wealth continues to be created, particularly by entrepreneurial families around the world. And this growth, across the major emerging markets, Asia, Latin America, Middle East, we're seeing anywhere between a 6 to 8% growth rate that should continue through to 2025 in terms of the high net worth, ultra high net worth family wealth. What we're also seeing is that a lot of this wealth, and this is particularly relevant to the Middle East, is held within family-owned businesses. And a lot of these businesses are yet to go through their first real succession in terms of the transition process. 70% research shows that 70% of family-owned businesses are going to change their leadership within the next 5 to 10 years. And yet only half of those, or less than half of those, in fact, have a well thought out strategic plan as to how they are going to implement their succession. So in order for families to continue their prosperity, there's a real need for the generation that has created the wealth to really think long and hard about how they achieve this in order to continue the prosperity their families, but also the societies in which they live in.
So, Chris,
yeah,
I think it's a great point, and I know we've had a look at the structures with David, and we've looked at the opportunities and the advantages. Just picking up on your point with entrepreneurial families, what
so if you could repeat the question, Heather.
Seems to have frozen. So
okay. That's okay. So maybe touching on a couple of the other trends. We're definitely seeing the emergence of new generations. There's a lot of new ideas. Clearly, the next generation see the world very differently to the way that the world has been seen through their parents, and they will often want to take their families in slightly different directions. So, thoughts around philanthropy, tech, ESG investing are very prevalent for this generation. And also, lastly, I think families are becoming more and more international in their outlook. And clearly, Dubai is a massive trade hub, with many of the business families looking outwards from Dubai in terms of expanding, their businesses and their footprint. But with that, the challenges of family fragmentation and complexity also arise, and these are issues that we need to solve for.
Yeah, I think one of the things that we've noticed, certainly from our exposure, is that philanthropy is key internationally, but particularly here with the GCC families and the expat families that we have supported. Maybe, Chris, it would be a good idea for us to also just talk about some of the unique tailored approaches that the families have taken to incorporate philanthropy into their structures, and how that's become particularly effective.
Thanks, Heather. Yes, absolutely. So when we talk about the family challenges I mentioned around how they maintain their continuity, how they avoid the fragmentation, philanthropy is a really critical means to help achieve this. So where we find this works best, or has worked best with families that we've worked with, is that there's a clear value set that the family will define in terms of what the purpose of their wealth is. And within that, they will then define what they want, how they want to put their philanthropic work to effect. So when you sort of match the family's shared beliefs and values across the wider family enterprise, and when I refer to the family enterprise, it's pretty clear with many of these families, not all of the members of the family are going to be able to run the family business as the family becomes more diverse, more complex, more international. But a lot of the family members can play a really important role in terms of really driving their philanthropic activity. And I think, we're obviously in the middle of this sort of economic crisis that we face at the moment through the pandemic, and we're already seeing many family-owned businesses really turning to how they can help and explore how they can contribute meaningfully to alleviate some of the real pressing issues that we're seeing right now. So philanthropy is a really excellent way that the families can help not only their societies that they've benefited from their own business activities, but also how they can really give back to society, and at the same time give their families a real sense of role and purpose, into the future.
Chris, just before I ask you my next question, may I just remind everyone we'd like to make the next session. We'll have a quick Q&A, and we'd like you to join in and ask questions. There's a chat function. I'm waving my hand everywhere because I know it's somewhere on the screen, and hopefully my tech will not fail me and I will lose you all, but somebody will pick up those questions. So we encourage you to ask those in a moment. Chris, we saw, obviously, David went through the how the DIFC had updated the trust and the foundation laws in 2018. What impact do you see this has had in the region specifically, right? And I'm not just talking about the GCC, but also the wider MENA region and Asia, etc.
Yeah, I think the proactivity of the DIFC has really been excellent in terms of driving forward these initiatives. So there's clearly the realization that, you know, as we go through the wealth creation cycle, then we need to move into how we can transfer and preserve that wealth across generations in order to make sure that prosperity continues. And I think through having a very strong legal framework, as David Russell QC highlighted, geopolitical stability, having a really strong international outlook, you know, I think the DIFC in particular is really well positioned to drive a lot of this stability that we need in the region, to attract businesses into the region, to support the wealth that's being created and the family businesses that are being created within the region. Because I think uniquely within the Middle East and the DIFC and the UAE, there is such a strong link between families and business that it's really critical that we have these frameworks in place that are well recognised internationally with a strong legal framework that enable this succession to occur.
Yeah. I will not dodge the two questions that I have in my mind, and I will ask you, Chris, to begin with, to give a minute head to everybody else to prepare their answers. I think we can't have this webinar and this discussion without talking about COVID. And of course, COVID's impact on us on a personal level, individual level, and as businesses and professionals. And of course, our private clients and all our clients look to us as industry leaders to seek counsel. So how are you, Chris, and our team, perhaps we share our experience of how COVID has impacted some of the family businesses that we support, and then I'll turn to Salman for him to share some of his insights.
COVID absolutely has impacted everyone, I think. You know, no business, no society, jurisdiction is immune really from the impact of this. And you know, uniquely, I think with this crisis, which is now an economic crisis, we've seen a real reduction in supply and demand, which is unprecedented. Also, the speed and severity of what's happened is also a significant challenge. When we turn to how family businesses are looking at this, I guess it impacts a number of levels. Clearly, you can have family members that are directly impacted. And then from a business point of view, you know, the speed at which families can make decisions of how they deal with their business under this difficult climate is also really important. There's no doubt that relationships are clearly being tested at this time. And where we've found families are able to sort of manage well through this crisis is that they have well thought through protocols and forums around how they can communicate well amongst each other with the key stakeholders in the family in terms of really making these important critical decisions, such as, you know, how do we preserve cash? Do we stop investment in this particular area? You know, how do we get those principles and consensus? So families that I've worked with, where we spend a lot of time developing their sort of family governance, which I like to refer to as the software that we then embed in the hardware of the legal structures that David has outlined today, are really able to make clear decisions that the stakeholders across the family enterprise understand, can have input to in a very safe environment. And I think also, you know, as I said earlier, some of the philanthropic activity is really accelerating because there is such a pressing need to move forward with how we look at vaccines, etc., to deal with this this huge issue that we face globally. Also, I think there's a realization that families are really recognizing the need that they need to plan for the unexpected. No one anticipated this impact 3-4 months ago. So I do think that a lot of families are reflecting on the need that they do need to really think very carefully around how they plan their businesses and also how they plan the family enterprise, so that when we face these types of unforeseen challenges, that they can preserve their family value, keep the family enterprise together, and continue to be prosperous in the future.
Yeah, and I think you know, in adversity comes clarity, and issues that were confusing some of our families in the past, with the time or the lack of time now, has helped them to reinforce what they need to do. Salman, I enjoyed the setting of the scene that you provided for us. And I think, if nothing else, a lot of family and family businesses are pivoting, right? It's a time to reflect and pivot. What are you seeing from on a trending point of view, and the patterns that you're seeing now with the families here locally, and how they view the future in light of what's happened?
Well, let me structure my response in kind of 3 areas. One is kind of the policy and economic response, which is to say simply that a large external structural event has happened, which is impacting economies around the world, and different governments around the world have taken different approaches, but fundamentally the concept is to plug kind of the gaps that are emerging when it comes to businesses and people impacted by it. So like other governments, the UAE government, the DIFC has a whole bunch of stimulus programs for across the board designed to solve short-term problems that are impacting clients all over the place, ranging from cash management and cash flow. Now, what's interesting is the second piece is a larger comment on digitization. Agnostic to COVID, the DIFC had just kind of completed our thought process on the future of finance late last year. And a critical component of that was not just a look at fintech or financial technology, but a larger look at how to digitize regional economies, including Dubai, because obviously one of our key objectives as a financial center is to drive economic growth and job creation. And so as Dubai pivots from real estate into services into what's next, the digital agenda was all our mind. And everyone knows this, COVID has absolutely accelerated that agenda across the board, right? So ranging from different business models to the digitization of companies like Vistra internally, DIFC internally. One quick observation. We've all been working from home, and we've had essentially zero interruption in serving our clients, right? Because we're a digital business. For our clients, we're seeing a number of different changes. So naturally, this is a great example. Our engagement, I think, is incredibly strong via this medium. And similarly, our clients, including family businesses, continue to start to think about engaging their stakeholders digitally, and they realize that while relationship building is super important, pressing the flesh, as it were, you can have meaningful exchange and engagement via methods like this. The other thing there's many more areas. Let me just be brief and summarize one other point. We have long looked at, Chris made the very interesting point of talking about intergenerational wealth transfer. We are particularly interested in seeing what percentage of that roughly trillion and a half dollars of intergenerational wealth is going to be risk capital to fund and finance the future of finance. I was in San Francisco last year at a conference where someone said that family capital may be the best kind of venture capital available because it's long-term, it doesn't go up and down with the vagaries of the market. And I think this is a discussion that we should have collectively as an asset class, which is the notion of families investing in businesses is obviously well known. I think the next great conversation post-COVID is to see how we accelerate the funding and investment of growth businesses from family capital. And I'm very keen to hear the views of the panel.
I think, Salman, we have just found our title for the next webinar. There you go, Lucy. I'm conscious of time, and I just want to pick up on a question, if I may, that's been posted by a very dear friend of mine, Jeremy, in London. And I think this will be to David. So, David, does Dubai trust law allow for variations to be made to trusts, where it is extradited for the trust as a whole, as per Section 47 of Bermuda's trust law? Or do you have to show benefit for each of the beneficiaries? Thank you very much for that mouthful, Jeremy. Over to you, David.
Jeremy, it's David. Can you hear me?
I'm sure we can hear you.
One of the advantages of being able to shop around for best practice was that we were able to go to the Bermuda law. Section 47 of the 1975 Trustee Act in Bermuda is now Article 41 of the DIFC trust law. As usual, we've enhanced it because we permit retrospective approval. Technically, it's not a variation of trusts. That's important, particularly for United States tax purposes, and because it doesn't require the trustee and the beneficiaries, or particularly the adult beneficiaries, to agree to the terms of the variation, which can have quite unpleasant United States tax consequences. But yes, the short answer is yes, we do, and yes, we've done it better.
Not that it's a competition, of course, David. We don't want to start another geopolitical situation here. Okay, I think we're kind of reaching time. I know many of you, Jeremy, I'm not going to share your comment just yet. I know many of you have asked whether the presentations that Ali and David have referred to will be circulated. The answer is yes. I'm very sorry for any of you that I've not asked your question. We are all available, and you can contact us anytime. I'm sure there'll be many webinars that we'll be following up on. We started with Ramadan Mubarak. I will conclude with Eid Mubarak in advance. It's not that far to go. On behalf of Chris, Salman, David, and Ali, and everybody that's taken part to put this webinar together, thank you very much. Any issues with tech, then please send them all to the IT Vistra tech people. They'll be happy to receive those. And other than that, thank you very much for joining us.
Thank you.
Yeah, bye.
Take care.
Thank you.